When it comes to building wealth over time, one of the best ways is by utilizing the power of compounding. This could include the things like interest or dividends. The idea is when you get paid dividends, you use that dividend income to buy more shares. Think about it. If you have 10 shares and they pay you $100 worth of dividend income, you take that $100 of dividend income and reinvest that. And now maybe you have 11 shares. So the next year, you're going to get a higher dividend payout. The process works even faster when we are talking about dividend growth stocks. These are companies that are increasing their dividend over 10% per year. So now you are not only getting paid dividend income and reinvesting that money, the company that's paying you the dividend is also increasing their dividend payout each and every year. So now you have more shares and they're paying a higher dividend amount, which you can see how that process compounds over time in your favor. So in today's video, we are going to talk about 3 of the best dividend growth stocks to invest in over a long period of time. And these companies are not just increasing their dividends at a fast rate, they're also high quality dividend paying stocks. So if you love dividend growth stocks, then do me a huge favor and click that like button down below, as that does wonders for the growth of this channel. Also hit that subscribe button. And with that being said, let's jump in. Hey everyone, Mark Rusin here, back for another video talking about dividend growth stocks. As always, everything shared is for informational and educational purposes only. And before we jump into the video, let me take a quick moment to thank today's sponsor, The Motley Fool. The Motley Fool has a ton of great products and tools for investors of all levels. And right now, if you go to fool.com/Mark, you could sign up to receive their top 10 stocks to buy right now. So definitely go check that out. And with that being said, let's take a look at 3 of the best dividend growth stocks to invest in. Dividend growth stock number 1 is Lowe's Companies, stock ticker LOW. Lowe's is one of the leading home improvement companies you will find in the market today, lagging the likes of Home Depot, which is a great dividend growth stock in itself as well. But we have seen poor management with Lowe's for a number of years, poor acquisitions, and that gap between the two companies, Lowe's and Home Depot, has been very wide. However, in the past few years, since the summer of 2018, the company hired CEO Marvin Ellison, who has changed the company drastically. He has changed the number of SKUs that the company has, the types of SKUs, the location of where products are within the stores. He has also improved online sales and making improvements with pro customers as well, which has closed the margin considerably between them and Home Depot. For those of you that don't know, Marvin Ellison was a senior level operational executive over at Home Depot, so he knows exactly what makes that company tick. Lowe's has paid a growing dividend for 61 consecutive years, making them not only a dividend aristocrat, but a dividend king, which makes them dividend royalty. To be a dividend king, you have to pay growing dividends every single year for 50 consecutive years or more, and Lowe's has done it for 61 years and counting. Lowe's currently pays an annual dividend of $4.20 per share, which equates to a dividend yield of 2%. In terms of dividend growth, which is what we're here for today, over the past 5 years, Lowe's has increased their dividend at an average annual rate of 20.7%, which is some incredible growth. As you can see on this chart, the company has increased the dividend for over 30% over the past 2 years alone. Next, let's take a look at valuation. Analysts are looking for Lowe's to earn $13.95 in earnings per share, accounting for only 1% EPS growth in this next year ahead, before returning to double-digit growth in terms of EPS moving forward. However, given the slowdown in the economy and the real estate sector as a whole, Lowe's could be a little stagnant. But knowing this and going in, you are still getting a great company at a great price, as the stock trades at just 14.9 times next year's earnings. Over the past 5 years, shares of Lowe's have traded closer to 19.2 times, meaning right now, shares are roughly 20% below their historic norms. Another top dividend growth stock is Broadcom, stock ticker AVGO. Broadcom is a very diversified semiconductor company, one of the largest in the world today. They have a market cap of $248 billion, making it also one of the largest semiconductor companies. Broadcom's diverse product portfolio includes leading semiconductor and infrastructure software solutions. Its semiconductor portfolio, or portfolio as a whole, includes data center switches, wireless infrastructure, fiber optic, cybersecurity, infrastructure software, and much more. For years, the company has supplied chips to the likes of Apple, but as expected, that relationship is slowly coming to an end over the next few years. In the meantime, the company, already knowing this ahead of time, has built a strong, diversified portfolio of products, and they are expanding through acquisitions as well. And their success has been evidenced by the strong free cash flow growth that we've seen from the company, as it has steadily grown over the years. And as we know, free cash flow is key when we are talking about dividend stocks. Dividends aren't paid from net income or EPS. Dividends are paid from free cash flow. The company currently pays an annual dividend of $18.40 per share, which equates to a nice dividend yield of 3.1%. In terms of dividend growth, Broadcom is not on the same level as Lowe's in terms of consecutive years, but the company has increased their dividend for 12 consecutive years now, which is great. They have been one of the strongest in terms of dividend growth rate, as they have a 5-year dividend growth rate of 21.3%. When a dividend is growing at that rate, the power of compounding is working in overdrive. Now let's take a quick look at valuation. Shares of AVGO are trading at a forward earnings multiple of 14.3 times, which is in line with their 5-year average of 14.0 times. The third dividend growth stock we're going to look at today is one of my favorites, and that is ABBV, stock ticker ABBV. ABBV is what I like to consider the investor's trifecta. The company offers growth potential. Since splitting with Abbott Labs in 2013, the company has a total return rate of 545%, compared to the S&P 500 returning half that at 223%. They also offer a great dividend yield of nearly 4%. So not only are we getting some growth potential, but you're also getting a nice dividend yield. And lastly, they offer strong dividend growth, which is what we are focused on today. Over the past 5 years, ABBV has a 5-year average annual dividend growth rate of nearly 16%. So a near 4% dividend yield. We're getting solid dividend growth, and a dividend that's growing at a 16% clip is amazing. Not something I expect to hold up moving forward, but those high numbers are impressive nonetheless. ABBV, like all the other companies we have looked at today, have done a great job increasing their free cash flows over the years, which has helped fund these growing dividends. ABBV is at a place that many investors have circled on their calendars for years, as they're at a crossroads, as their number one drug, Humira, has lost patent protection here in the US, something they already lost in Europe a few years prior. So we're already seeing biosimilars come out, which will negatively impact shares of ABBV, or ABBV as a whole, in terms of their Humira sales. However, do not fret, as ABBV has done a great job diversifying their portfolio offerings. If you look back a few years ago, you would see ABBV and Humira accounted for nearly 70% of their company's sales. But fast forward to today, and Humira, prior to 2023 starting here, accounts for roughly 30% of total sales, as they have diversified their products and they don't rely anymore on one single product, which is great for a company moving forward. In terms of valuation, shares of ABBV trade at a forward earnings multiple of 13.6 times, compared to their 5-year average of nearly 11 times, meaning shares are a little pricey at current levels. ABBV is already one of my largest holdings, but if we see shares of ABBV dip below $130, I will definitely be looking to add once again. So there we have 3 of the best dividend growth stocks to keep on your watch list. We looked at Lowe's, who has some sector headwinds in the real estate market, but they're trading at a very cheap valuation, and we've seen over 60 plus consecutive years of dividend growth. Broadcom is trading pretty fairly valued at current levels, but there's still strong demand for their products moving forward, and they are a great company growing their dividend at a very fast rate. And lastly, we looked at ABBV, which I consider the investor's trifecta. There's growth potential there. We have seen it over the past few years. They also have a solid dividend yield right around 4%, and dividend growth rate over 15% is very solid. The company is losing patent protection with Humira, which is scaring a lot of investors, but they have done a great job through acquisitions and through a loaded pipeline to build up more than one. So they're no longer relying on just one product, they're now relying on a sum of the parts, which is great for investors and I think will be great for the company over the long term. Down in the comments section below, let me know what you think of these 3 stocks. Do you own any of these 3 stocks? And also, if you haven't done so yet, smash that like button down below, as that is huge for the growth of this channel moving forward, and subscribe so you'll be notified anytime we drop a new video. With that being said, we'll see you in the next video. Take care.